All right, morning everyone. Well, the SPY is coming down to 61% retracement off of the pullback from February the 19th from the run up from October the 3rd. And this is where we were actually looking for it on the swing side, talking about it inside of the Saturday study group where we'd be at. And we are hitting that as we speak right now on that. I posted earlier this morning, late last night, that we were looking for the pullback to the 61. So the key thing is with the 305.66 level, I want to see a little bit of respect. Not a lot of respect, but a little bit of respect. I'd like to see a nice little bounce at the open since we've done nothing but drop all night long. And pretty much since noon yesterday, we've just been dropping. I'd like to see a small bounce. I'm not looking for a crazy amount, gap fill back to where we came from and all that. I'm just looking for a small bounce at the open, more or less a curl back, about a 31% off of this small impulse leg down. Nothing really major, but more or less just look for a bounce right around here to about 308, not really much more than about 310, and then look for a comeback, a retest that 305 level. We get a nice little break at 305, guys. This is where it's going to get fun. It's going to start getting bloodbaths going to start taking place at this point. And why I say that pretty much is if we go out and look at our daily chart, okay, we're getting awful close to the 200 here. I haven't made it there yet, though. We're awful close, but you see, when we really look at that number right there, that's 304. Right? We're at 305. We're very close to the 200 on the daily. The hourly chart, we've already cut loose on the 200. So, being said, I want a little bit of a bounce, a little bit of respect here. But at the same time, we wind up breaking this 305 today, we are going to start bleeding. 300 psychological number. That's pretty much the next level. The big support zone, 296.5 is where we're going to be looking for as the bloodbath starts. The 300 is going to be scary for a lot of people. So look for a potential push down to this area. We've already gone way too much in the last 12 hours or so of trading. So we need to start looking for that cycle bounce, get things to slow down a little bit before we have this happen. But once if we break this area, it's not going to be just fear happening inside of the stock with retail, but we're going to start seeing algorithms kicking in saying, wait a minute, we're not holding support like we should. We're going to start seeing a possible engagement happening with the computer systems. We got to watch for all that. So let's just keep a real close eye on what the market's doing right here. Play with the direction of the market. This is a scalping type day for any type of long positions. We start bleeding off more, then you can look at a trend on the downside. But we've already received so much downside in the last 12 hours. Don't get hell bent that we're going to be continuing going down until you actually see the market go down below this level and stabilize below this level off of that. NVEE, we've been talking about this one also in the study groups where we had a nice run up. We've got the pullback. They came in on their earnings, a light miss, and they also missed on their revenue. Their guidance going into next year is just in line. So this beautiful run up that they've had going up into the earnings now needs to basically come back down to reality. So we need to start seeing this one start slipping down off of it. If you're still in those swing long positions, you need to start considering cutting this because the report's not good. The market's already pulling down. The combination of the two is not going to be significantly great for this particular ticker at this point. Just basically pay attention to how it's trending down here. We're coming up to kind of the top area of the trend line and stuff. I don't really expect it to get much more than about 65 or so, and then we should start seeing a little bit more of a bleed off on the MVEE. T-Doc, we have a light beat on EPS. We have beat revenue. We're in line on our next quarter going into EPS, but we're going to be higher inside of our revenue. And then we're looking at next year pretty much doing the exact same thing as next quarter. So kind of a win-win across the board on this one. So this one's going to be kind of define the market more or less because it is going off of earnings. We are at some structured areas right now that we're hitting for some resistance. It needs to break above the 137, 138 zone in order to be able to have much more strength into it. I do expect a gap fill coming into the open before we have any more possible upside. You can see a possible gap fill to about 130 or so off of this one, but this one definitely will be one to look for if you're into the long idea, because with everything bleeding off in the market, this is going to be your one of your preferred ones if you're trying to stay long biased on anything. SQ, we got a light beat CPS. We're in line on our guidance going into the next quarter, and we're going to be below next year. Doesn't sound so hot. I'm not impressed. If anything, this is more of a neutral with guiding lower. So look for this one to also kind of start bleeding off. This one usually, well, in its past, in the last few years, has been real consistent at following the SPY. It's kind of changed in recent months. I've noticed it's not as stabilized with the SPY as it used to be. You know, whereas we got a little bit of a report over here and a pullback during inside the earnings area. But we should see some more bleed off of this. I think we're going to be starting looking at probably a pullback to about 75 off of it. But pay attention to the upward trend we've got during the after hours session. We got to break that area before we start seeing any of that gap fill start taking place. And don't really expect Square with this report to really start flying through the roof. I think we've kind of seen the highest point is over here in the after hours session off of that. Just play the price action with it. It's more or less a neutral earnings report. SAGE, this one's had a farmer runner. This one you also need to look at it as it's a sleeper. This one should stir up once the market opens up. We've got really no movement happening other than a little bit of algorithm happening after hours. So I'd like to see it basically reset from where it actually came from. They did beat pretty damn good on their EPS. I mean, really good. But they missed on their revenue. So that kind of contradicts what it's got. But the EPS is pretty high. Do not have guidance off of this one yet. They could have a conference call come on. Check the schedule to see if the conference call has happened yet or not. And if there has been, since I've put my notes together, if they've came out with guidance. But more or less with this one, let's see if we can get the reset where it's at on it. This will be more of a neutral, more long bias neutral, just because of the EPS is good. But if they're guiding down lower, then forget it. This thing's going to bleed on you. Microsoft doesn't expect to meet their prior guidance reports. So the virus is hitting them. And, you know, first thought I had was Microsoft, how are they affected? They're a software company. Then I started realizing, oh, yeah, they sell the little Surface devices, Xbox. I mean, that's hardware. So you got little components that are being made in China and stuff. So, yeah, it does make sense why they're going to have some guidance issues here. Because they got too many widgets that are made over and you know, offshore on that. So we've already had the reaction after hours. Microsoft's had a hell of a run. You honestly should expect Microsoft to bleed off a lot more than it did off of that news. Because of the large run, it's been bought out so heavily. It's just not slipping as fast as it should. I do see it coming down to about 160, and we could probably get some stabilization off of that area there, because at least they're being upfront and honest about what's actually going to be happening. Most of these companies seem to be kind of got their head in the sand or something, don't realize that it's going to affect them, or they're just don't want to face reality yet that this could actually take place. L Brands. Or limited brands, excuse me, LB. They beat lightly on their EPS, and they're in line on their revenue, and they're guiding next quarter lower in EPS. Nothing good about this. That light beat is on EPS is a joke. So look for this thing to kind of keep on slipping down. The only thing somewhat positive recently with this company is they are trying to sell off Victoria's Secrets, which has kind of been bleeding them over the last few years. That's still not enough to really get the stock to go back up too much. So this one could have some good slippage down to about $20. So you got about a $2 drop that you could possibly get out of it. Should see some stabilization down there because it has a hell of a time trying to break through that $20 level. Etsy, we've got a light miss on it on EPS. We did bid on our revenue, and we are guiding next year higher in revenue. This one here, we've got a little bit of a patterns kind of developing for a pullback. We've already started to get that taking place. We have hit resistance area for this potential pullback that we've got, so we kind of need to clear up all this noise that we've got going on with this particular play and look at more or less how much have we actually gap filled already off of this run. You know, did we already hit the first PT? And the question is yes. It does have room to bleed down to 53, but at the same time, we got to be somewhat cautious because it's already bled down already to a first PT target. It is heavy looking, so I'd like to see a little bit more slippage down here before we have some more upside. Around this 53 area should be a pretty decent basing off of that, but they did. The guidance and the beat on the revenue should kind of help them out because the EPS, I mean, at least they're being somewhat honest. I mean, it's a light miss. It's not a dramatic difference off of it. Crocs. Who wears Crocs anymore? Or that's, you know, kind of the joke off of this one, right? Well, Crocs is pretty much, they seem to always miss. So once again, we've got a beat. Very light beat on their EPS. They're in line in their revenues. They're in line going into the next quarter, below revenues next quarter when it comes to the revenue. And going into next year, they're going to be above EPS again and just in line. We're back and forth, back and forth. And basically, I'm not impressed. If I was going to think about investing in a company, this would be not one of them because they're telling me they're basically not going to be doing a whole hell of a lot. That's why we're bleeding down to $30. Algo, more or less. Look for a little bit of a gap and then probably a retest to the $30. A lot of times they have the conference calls during the day, so check the conference call time on it because sometimes they have it in the mornings on that one in the past. Best Buy. That's probably one of the more active ones we'll have today with their earnings. They beat really good on their EPS. They're just in line on the revenue. They're guiding next quarter in line on their EPS. They're going to be lower in their revenue. And we're looking at going into next year being higher in EPS and in line in revenue. Their comps are up 3.2%. Not too bad. So more or less what they're telling us is, hey, we did pretty well this quarter somewhat, but everything else is pretty much in line. Next year is the only thing kind of giving us a little bit of a positive aspect. So it's not enough to bring in some investors to probably want to get into this thing yet, not to mention the market bleeding off like it is. I'd like to see this thing bounce at the open, then look for, you know, more of a downside move to try to break this 78 level off of. This is a nice little structured area for it. 78 break, we'll get to about the 75. Best Buy is usually pretty fun, and just play the price action. It did sell off going into the earnings over the recent days, so be a little bit cautious on it going down too terribly much. Med. We've got a huge beat on our EPS, and we've got a beat on our revenues, but we are guiding lower, lower, lower between next quarter, next year, all the way around. Looks like they've seen their best time behind them. Nothing good in the future. So guidance is yanking this thing down. The 80 mark right now, we should see a little bit of a bounce off of that. Too light of a trading. I want this thing to basically reset and look for 80 being more or less the floor. But just look for a gap fill back up and then bleed back down. I'd like to see a dead cat bounce effect out of this one come into play. Box. We've got a light beat on EPS. We got a good beat on revenue. We're guiding next quarter higher across the board, and we are going to be guiding next year with good higher EPS but flat revenue. Pretty decent report in general when it comes to the guidance side. The EPS is a little bit on the light this go around, but we had a nice pop and a pullback, so we can kind of reset this thing now and start looking for a potential dip buying opportunity to see if we can get a little bit more upside to retest those higher levels. Plan. Beat lightly on EPS, beat their revenue, in line next quarter, and going to be above the next year. But yet we're bleeding off pretty hard. That doesn't look exactly right according to what we've got coming into their report here. So look for a bounce on this one here, because this thing's dropped way too much. There's something at miss here we're not quite seeing of why the report is dropping this thing so dramatically compared to we're coming down below 2 quarters back. Something's not exactly right. We're missing something out of this thing. So be careful, play the price action with it. I'd like to see a bounce because this is too much of an extreme. Let me clear these numbers off here. Should start seeing a pullback off of it and look for stabilization off of it because this is just way too much on it. Now, technically, big picture, we do have a bullish pattern starting to take effect, but that just does not look like we've dropped enough in order to get that. We're just coming down to some previous resistance levels off of this. I mean, it's a recent IPO from last year, so this is just too much of an aggressive move, I believe, for this downside. So just pay attention to the price action on it real closely. Pay attention to all your stocks that are connected with the coronavirus. They're all going to be in play today. Be a little bit careful on the CODX. That one did have an offering that came out last night. They talked about it. So be a little bit cautious on that. It's a kind of a light offering, and it's still going up above their PT. It's at market. So I'm not too concerned about it pulling back dramatically, but at the same time, you got to be cautious because it is an offering in general. And any of these big tickers that have been kind of ran up, especially on the tech sector, are going to be hit with the market. We should start seeing bounces if we see the spike of the bounce along with those. So you can just play quick scalps on them. Don't get married to the long side on anything today. Just because we're coming down to a good support level does not mean this is a dip buying opportunity yet. The market is not at a stabilization until we start seeing institutions coming in here and start stabilizing that they're ready to bring the market back up. We need to be cautious that we could still have some more bloodbath coming and taking place here. We are at historical times right now, so we need to be very cautious on it because there's not a whole lot of history of this type of movement in the market in general. So anybody starts talking about previous past and stuff like that, be somewhat cautious on their comments because we are at historical levels of what has been happening in the last 24 to 48 hours of worth of trading and stuff. So y'all guys play it safe and hit us up in the Discord if you want to talk to us on the voice chat. Y'all have a great morning.